Hello. Now we're going to look at the key part of the whole process of setting up a business. It's to do with the funding and resources that you'll need to start your business. So first of all, let's look at the funding bit, the finance. What are the sources of finance that may be available for a business? Well, first of all, and not to be overlooked, we have sweat capital. What we mean by sweat capital is all the labour of love, the time, the effort that we actually put into it, and this is very much part of it. It doesn't show in your accounts, but this is a key driver for setting up a business. The second area will be your personal savings. If you've got any personal savings, that can be a key part. Many investors will look to say, well, if you're the entrepreneur, how much of your own money are you actually putting into it? Now, often your personal savings won't be enough, and you'll then have to look around, and the next probably likely source is what we call love capital. And love capital is from your friends and family or whatever it is, and you tell them about your wonderful idea, and you say, well, would you like to invest some money into this wonderful idea of mine? Now, if I can't find then money from our friends and family, then I may want to look outside. I may want to go to a business angel, which is it's now a step into the outside world. The key difference here is that the business angel, and perhaps if it's a very large operation, venture capital, will be looking at an equity stake. So all of these areas are often to do with equity. They're actually having a shareholding, and the advantage of them is you don't actually have to reward them until your business makes a profit, which then comes on to the next form of finance, which are loans. Loans are available from banks, all sorts of organisations, but remember, with the loan, you have to unless you can get a very long payment holiday within a relatively short time, you will actually have to start paying back either the interest or the interest and the capital of the actual loan. There are various schemes for young people where they can get loans from the Prince's Trust, and for people over the age of 55 they can get loans from Prime. In addition to that, obviously there are the normal bank loans and whatever. The banks tend to be lending on short to medium term, not actually on the long term basis. Additionally, you can get grants if you want to. Grants can be obtained from the DTI website. You can talk to your business advisor about it. So these are special grants, like for example in many areas you can pick up a 15% grant towards the capital cost of setting up your business. But the key thing about grants is that you must not have incurred the expenditure usually before you've got the approval for the grant. You can't apply for the grant retrospectively. So therefore that means to say there could possibly be very long delays in obtaining the grant funds, and may take some time for you to set up your business. Now, other types of funding which are more short-term, and some of them have advantages and some of them have disadvantages. Many people who have problems in getting finance might think of trying to finance it on credit cards, particularly personal credit cards. This is a very risky manoeuvre, and some people we've actually heard of have actually used the 0% interest by changing from one credit card to the other to actually raise money. But usually with these schemes, if you fail to make one payment on time, the whole amount of interest becomes due. So credit cards are very sort of risky. Other ways of financing the assets of the business may be hire purchase or leasing. This is often a better way than actually buying it, actually trying to buy it for cash. Then as your business gets going, you're trying to build up trade credit. And then if you get into a position where people will actually owe you money, maybe blue chip customers, then what you can do is to actually factor those debts out so that you can get an earlier cash flow. And then finally, what you should also be doing is setting up with your bank an overdraft facility Not the overdraft being the main source of finance, but the overdraft being a means of dealing with the peaks and troughs, the high points and low points of your daily cash flow, to make sure that your business always has cash.